Okay, good afternoon, traders. Hope we're all doing well on this beautiful Friday, and we're looking forward to the weekend. Uh, we've got, just as per usual, we've got on the screen there, we've got all the information for trade setup and the live stream. You can follow us at Twitter in the top left-hand corner, join us on Facebook, or link into us through YouTube. It'd be great, and thank you all for your support as well. Looking forward to a good new year for 2017. As we normally just like everyone to have a look at is the general advice warning. So if you just get a chance, just go through that. We don't give personal advice, so everything we do talk about is just our own opinions and where we view stocks or markets or the action for the day and overnight. All right, we'll go through today. We're going to talk about obviously what happened overnight. Have a bit of a chat about that, and then what we'll do is. Sorry, I just sound like I've got a bit of an issue with my sound, is it? Going, all right. I know what it is. That will be better, I'm assuming. I just have my speakers on. So we're going to chat about today. We'll just go overnight, have a look at what happened overnight, the action for the night. Not a big night in the US, down a little bit. More of just a sort of bit of a seems to be an echo. Is that all okay now? Or is it just me still? There you go. Don't know what you're talking about, Dave. Thank you, Scott. How are you doing anyway? Um, no, it was me. I just had my speaker on, sorry. So I would have been talking that's coming out of the speaker as well. Um, Sharon, how you doing? Hope we're all geared up for a nice weekend. Um, I think Davin's just stirring me up, everyone. He likes to sit in there just listening away and teasing me. So, all right, we'll get into it. We'll go over what's happened from overnight. Like we said, not a big night, but it doesn't look like our market's too happy today. Got sold off, and if we just quickly have a look at the XJ, you can see it's probably a bit hard to see on the daily, but we've had that little spike up through 58, hit about 58.25, I think, a few days ago. That was on the 9th, high 58.27. So it did perk up pretty hard there and did sort of a bit of a washout, bit of a blowout there, I guess. Next day was pretty much down. And then we made a little lower high, so we retested that 58 and we just sold off now. So you would have expected that, I guess, coming off that 50-50. It's just been quite strong. And that was after the elections and all the everything about Trump. And lo and behold, he kicked the market up, and that's very positive in the US. So that's kicked its way on, and we do expect that leg to have some sort of correction. Maybe I don't necessarily expect it to pull down to 5,600. That's a bit too negative, I guess. But it just goes to say we've got in the US as well. Just keep an eye on the reporting, the company reporting, because if they're not strong, if they don't live up to expectations, then this market may be a bit overcooked, and you'll probably find that people will take a bit of profit. The banks are, I think they're meant to be reporting tonight. There's a few banks out tonight in the US. I think it's Bank of America's one. Merrill's there might be another one. I can't remember. There's a couple of about three big ones there. Um, so that they're going to be kicking off tonight and then going into next week. So I think people will be focused on that. Well, traders will be focused on that just to see if if you hold in long positions, is it worth getting out? And also to Trump, that the market reacted a bit to his first presentation or conference or whatever you want to call it when he got up and had a bit of a chat. He didn't say too much. He didn't press the points that got him into the presidency, I guess, that won him the elections. It was pretty much measured. So they're really going to wonder if he's going to deliver on the goods, I think, now. And I think that's a key point as well that people will be focusing on. What does he do? What does he say? He's going to have to start, what got him into power and all the promises, the election promises. He's got to live up to them now. So that'll be a big thing to watch out for. Let's take a look. I'll just go. Well, there's not much to look at in the ASX, to be honest. Right now, it's just headed south. So it's got opened up and just went bang straight through that 57.45 support zone, and you can see that it did wash out that 57.97. If we just maximize that a bit, we've discussed that a bit. That was sort of your key level, holding down this trend, just this move down. And if it couldn't get down there, it was looking okay for a while. It was looking like it was going to build that high low. It did spike up through there, but that wasn't a really good sign, especially when you found that little shoulder and that high's met to about 57.94, so fell a few points short. That should have continued on if you had expected if it was a strong market. Continue on and push back up through 58 and so on. Maybe even attack those highs, but it didn't. It just failed there, and we found a bit more selling. Did push up into the close early hours of this morning, but then we've just come and gone bang. So dropped its bundle really. So it'll be interesting to see how it's going to go now. It got through 57.22. Not a major level, but I'd just say we might find it bounces off here, pops back up, makes a lower high again, and just rolls over. But we'll see how. It's really just looking corrective at the moment, so it's really just how far it's going to go, if that's the case. Now we'll take a look at pound. We actually put an alert out on the pound, so we're going to start, like I said, get into the foreign exchange a bit. So anyone that's interested, just check out the app if you haven't already. And we're going to start putting out a few alerts. It's not entry signals as such as what we've been doing the ASX, the stocks, but we're going to be giving a bit of key market structure, which way we view. So the pound, it's pretty clearly in a downtrend, but what we see is a lot of retail punters might have been taking some long positions from our analysis, that it might be a bit too heavily weighted to the long side for a few people. And I think what we'll see, and you can see this market, if it doesn't hold up this 120.49 zone, I think there's going to be a bit of a short squeeze. So you'd expect, a bit of a long squeeze. So as it pops through that support, you'd expect a few stops to be packed in there, a few sell stops, and that if they're triggered, that's going to give a bit of you'd think a rush to the downside, a bit of a spike to the downside, and then from there, we may just expect a bit of a retest, and that continued pressure to be put on the pound there. Obviously, we know what's happened with Brexit. They're talking about a hard exit, I think they're calling it at the moment, so out of the EU. And I think that's why the pound's not taking it too kindly. I just expect from that sort of fundamental basis, there's going to be a bit more pressure on the pound. And I'll just expect with these retail players in the market on them buying into the pound, maybe expecting to bounce off that longer-term support. You can see down here, I expect them to be squeezed out in this market just to wash them out to the downside. But we'll see how it goes. At the moment, it did head south a bit last night, continue that trend. You've got a key level at 124.36. So it pushes up. If we start to get higher lows build in here above that 120.49, then you expect that to start perking up and push up through 24.36. If that's the case, it's looking like that will hold up. But at the moment, that trend still is down, even on the 4-hourly chart. So the daily trend's down, 4-hourly's down. I think even the hourly and 30 minutes still on its way south. So that's not looking too bad. I just want to quickly take a look at oil also. Just got to find it now. Here we go. So this is the oil chart. This is a daily chart on crude. It's a continuous chart there. So for who doesn't know, continuous charts are just link up the two futures contracts, the past futures contract with the next spot month. And either way you look at it, it's not looking good. We've had that major push up to, was around the 125, bit of a pullback. So this is just longer term, obviously, we're looking at. Push back up, retested it, and that we call it a retest fail. You can call it a double top, whatever you want to call it. Either way, it's not looking good. So when you get those moves up and you've got these little higher lows in here building, they're broken, you can easily get a retest. And as soon as a retest and doesn't fail, so whether that's going to be a pullback and that's going to produce another strong leg up, we don't know at that point. As soon as you start getting failure and a retest, we call it retest fail, you get that shoulder there, that's not looking too good at all. So you expect the very minimum it's going to attack those lows at 105, which it did. It just pretty much powered straight through. And you can see that major sell-off all the way down to, I really didn't abate, down to $64, $65 a barrel, picked up a bit, washed out those lows, picked up, so it had a bit stronger correction, back up again. And then you can just see that price action. So we've got another key level really at that 77, 78 zone, just in this zone here. And then it just sold off again, made lower low on the major trend, put back up, pick back up there, tongue twister there, pick back up, and then a sell-off. You had another push lower down to those lows at 36, 37 mark. So at the moment, the current price action, the way I view it, we've got we've got our major level, which we mentioned back up. Just get that back up here. So I'm just trying to make that chart a bit bigger. There we go. We've got our major level back up here around that 78, 79 mark. But at the moment, we've got a bit of resistance around that 55, and everyone's talked about it It's been all over Bloomberg, the news, what they're gearing up for. We're building higher lows. One thing to take note of, you can see when it sells down, it makes a higher low. It's sold quite heavily, but it's the price is actually not making new lows, which you would expect. Doesn't mean anything at the moment, but it just means that buyers are starting to step into this market a bit earlier at higher prices. And whether or not we get here, maybe a bit of a pullback, build another high low, and sooner or later, I think this is going to come under pressure, this 55 mark, especially now that the Saudis have really kicked off with their article production cuts, and they cut a bit more, I think, than expected, than they promised. So it's all looking good for crude just at this moment, but it'll be interesting to see. I think that the biggest thing in that market now is whether or not they're lying. It sounds stupid, but whether or not they're all going to cheat in some way and actually produce more than they promised, or not cut as much as they promised, and so forth. So take the opportunity to just pump out a few more barrels. So we'll see how that goes. But if it starts breaking up through 55, I think you're going to get some decent correction back up towards sort of this. You've got a zone in here also through, what's that? It's about 65, say. So you got $10 in it. If it goes up and tests that area there, it may pull back, then push back down and retest 55 and take a longer term view and push its way back up to, that 78, 79 mark. But we'll see how that plays out. I thought I'd just pick that out because I think it's interesting. It could be an area to start looking into crude. If everything works out well, I think they're going to have cuts and they're going to filter through. Obviously, if everything holds up, then that could be, well, that sector in the energy sector could be something to keep an eye on. Let's get into it now. One thing I better do is get the actual video up. So as discussed, what we're going to chat about today, as I put together, is 3 early warning signs that a stock is about to tank. This is based around a technical view. Obviously, most of my work's done about technicals. I do look at the fundamentals when we're getting into stocks and what we look for. I'm obviously not the best at them. Some of it's a bit hard for me to understand without I've got an engineering degree rather than economics. So I really enjoy the technicals. I find looking at technicals, I find it's just an easier way to see. I like the psychology behind the market. So what I'm looking at here is just 3 early warning signs from a technical perspective. Of when if you're holding a stock and it's starting to go on and it's looking good, you might be so excited because you're doing really well, but there's going to be times when the market could really turn on you savagely, and you just want to look for the different signs of when it could be turning or when it could roll over. You've got a major correction in play. So I'll get that up now, and we'll just go through that. I'll press play for you. All right. So guys, sit back and enjoy. And just remember, if you have any questions, just you can either whack them in the chat as we go, as you're listening, or if you need a bit clearer explanation on different points, just whack it in the chat afterward. All right, let's get into it. Okay, the live stream discussion for today will be focused in on 3 early warning signs that a stock is about to tank. Now, we just want to go through a few key elements that we look for when we're trading, signs that can give us a bit of early warning signs or a heads up that the market may be turning. If we're short, whether it's going to turn up, or if we're going long, whether we think it's going to turn down. So there's a few key things we look out for. Now, as a few of you would already know, and if you haven't already guessed, most of my trading is based around technical analysis. Now, I've done a lot of work into trying to understand the psychology behind traders, the psychology behind buyers and sellers, and the interaction between the two. I do look at fundamentals, obviously, and we try to obviously pick a stock that has good potential to move higher or has not very good potential and could be selling off if we're going to go short. But the bulk of my focus is on the technical, so you can't actually see the interaction between buyers and sellers and the psychology when you're looking at fundamentals. So we'll go through that today and the key elements that we look for. And the stocks that we're going to be picking on today is BWX, which we've traded in the past and done quite well on, CKF, which we've also traded and done very well on, and we're going to have a look at MYX. So we'll go through those in just a minute. But firstly, let's just get up a chart and we'll try to draw up of what we're actually looking for in a chart or in technicals. Okay, the first thing we would be looking for is just the price structure and what's happening with the actual move or what's happening with the share price, and just trying to see what sort of interaction we're getting between buyers and sellers. So let's just assume we've got a price, a share that's actually heading higher. So we've got that first leg. We don't know where that's come from. That's our first leg. We have a bit of a pullback. We've had a second leg higher, a bit of a pullback, and a third leg higher. So you can see with those, once you get to about three moves higher, the market tend to be getting a bit stretched. Everyone knows what's happening. There's no unknown anymore. It's more of the known. So what we would be on the ball for is, if we were long that, is just what type of price action we're seeing and where it could possibly roll over with regards to price action. So what we would be looking for from there is, if for this to continue, if this is pulled back and we start to build a good little base, we would expect that to be the next leg higher and continue up. If we don't and we fall short of the previous high, let's just draw that in. If we fall short of that previous high, for example, just up here, then we're starting to look for a shoulder. So once we start seeing the first signs of a shoulder come in, or a lower high, then we would expect a bit of contraction. Now, the next thing to look for, if we do get that contraction, is whether it's just going to completely capitulate, like in this first example, or whether it is a longer term contraction to build another major leg higher. So the first example, we've just got prices contracting. We've still got a high low, so we've still got buyers starting to jump back in at slightly higher prices on a minor pullback, which is the first sort of leg down in the blue. Then when you get prices kick back up again and we make a lower high, so now we've got a scenario where sellers are starting to enter the market. That makes sense. And then price just starts breaking through. So we've got an idea of, if we were long, we could just be following it up. Our major stop could be below this low here. But if we start to see that lower high in play, and we're not liking what we're seeing, we can tighten our stop up. If we've got the whole full position running, we can tighten it up on half. If not, we can tighten it up on whatever is remaining if we haven't already taken a partial exit. And you can basically just place a stop below that low just to enter, because you'd think there, if we're starting to get price rolling over and that a major lower high is building, then we don't know what's going to happen and we just want to reassess as we go. And in the first scenario, you get a good powerful sell-off. So that's a good sign that, okay, there's a lot of sellers stepping in. There's no buyers, nowhere to be seen. You get those sharp moves down. Now, the difference between this scenario and the second scenario is that we get in the same type of price action, or similar type of price action. We get that lower high. It's pushed down. It's taken out the previous low just in here. We can see, and it's made another lower high and then a previous low, and it's just taken out, that previous low there. But the difference is, at this price action, the move south, the move down, is not very convincing. So there is still some buying going on. There's still some, sellers are stepping in, but there still is a bit of buying, whereas this could really accelerate lower. And if it accelerates lower and starts building and then grinding higher again, there we really wouldn't want to be long at all. And we're happy just to get out of the whole position at that stage, because you'd expect, or you're preempting a break of this anchor level, which is holding this current leg up. Now we've got an anchor level down here still. We've got that move up, and we're starting to get more contractive action where the buyers are still lurking, they're still hanging around, and they're still ready to push price higher. And then what we would be looking for then is really this type of scenario where we get a move down fails, we get a little higher low build, and then we get that break up. So if we were long, we would be happy to keep that. We could just see that type of price action. We keep our stop below this anchor level on the presumption that this market is going to turn, build that higher low, a major higher low, and then pop up. So they're the two differences in price action that we would be searching for. Okay, another thing we keep an eye on, the second, apart from price action, is we like to look at stochastics and just see the power of the move or the strength of the move up or down. And obviously everyone knows stochastics. If you overbought situation, you're sort of above that 80 mark. Oversold is below 20 or 0.2 in this respect. So in this case, what we're looking for, if the market's pushed higher, we're looking for a scenario where we may be having stochastics pushing up. So these type of moves that might be oscillating around here as the price is going higher. But what we're looking for in this case, so let's just continue that out just to try to line it up with that move. We're trying to get stochastics where you can see the strength of the move is backing off. So these little projections higher, it's just running out of steam. So the market might be pushing to overbought. So it's extended. This move up here is not so extended. Then as we get that third leg up, the price is really starting to get extended, overbought, overcooked, however you want to say. And then those subsequent moves higher, as buyers are still stepping into the market in this scenario, they're getting a bit weaker. And then you're actually getting stochastics where they're starting to pull back. And then sooner or later, when you've got those moves up that are not supported by a strong, it's not strong, then you start to get more sellers are happy to step in, take profit, whatever, and then you start to get those accelerated moves lower. And that's what we'd essentially be looking for with stochastics. So you're just trying to see the strength of the move, trying to take into account how strong is that move up? Is this strong enough? There's been enough pullback where there could be a lot of buyers stepping in, or is this just going to capitulate? In the second scenario, we are seeing price back off here, but it's also the stochastics are more, the moves, if we just draw that up, so we've moved up into overbought when we're about at this stage here. Price is starting to back off along with the stochastics. So the moves down are sort of equal to what we would expect. So you can see these sorts of moves down, the price try to go a bit higher, it's getting oversold, so that the sellers are starting to step in, but price is also going with it. So it comes back to a sort of a range where then we might see stochastics pop up when we get price that actually kicks on and breaks back out again. So that move there is more controlled, whereas this move, you're holding, price is actually holding as stochastics are heading south. So the moves, you can see this is evidence that sellers are entering the market, but price is holding up. So sooner or later, price has to give way, whereas this is price is actually going with it. And then we get buyers stepping when, well, stochastics is more of a favorable position, or it's more even rather than overbought or oversold. And then price is still holding up above that anchor level. And then we could turn around. If we get that high-low situation, then you might find that the buyers start stepping. The strength of that move really kicks on. Okay, the third key thing, which we do look at, and which we really have to take note with our technicals. Say we had a move up, we had a pullback, so that's our new anchor. Once this high is broken, okay, market presses higher. It's quite strong. Market, you can see that it's a nice extension. Market has a bit of a pullback, builds another higher low once it breaks this high, and that becomes the anchor leg. Then you've got the next move up, and so on. But the difference, what you can actually see is this market looks to be slowing down. So you've got a good strong move higher, a good pullback, another move higher, but this distance between the low and the high is a little bit less, getting a bit shallow. And just showing signs, and the same with the third move higher. So you got 1, 2, 3. Third move higher, it looks like it's running out of steam. There's a few less buyers are stepping into the market, and then you may get your lower high, like we just discussed previously. But that lower high doesn't necessarily mean that your next anchor level down here is going to break. Okay, like we said, it could just pull back, contract on a minor scale, and then kick higher and go again. You don't know. Up until that stage, we really got to focus on our anchor, which is this here. So if this anchor is actually broken, so price pushes below, anchor's broken, to me that uptrend is failing. It's really starting to, it's the early sign that market's not going to continue. So what we would expect from there is either a press up, maybe to retest these highs. If we just mark that in, retest that high, or it just makes a major lower high like we've got in this scenario. If that's the case, then we expect really capitulation. You got 1, 2, 3, a good move lower. From there, we don't know what's going to happen. Then we have to reassess it as we go. But really, the anchors is a big thing too. Is a big point to look at. Okay, let's take a look at this in action. The first one is BWX, as we mentioned. Now let's just look at what we've got here. We've got the trend is higher. Pretty much we would define that as the anchor here. You see that that's had a good projection higher, built that little minor higher low. Then what we saw is that bang straight down through that anchor level, and then we popped up, made the high low, and you can see we actually bought it in here, made some money, but you can see that price action is really not strong at all. And then market just decided to tank from there once it hit a key level up at 524. And where we are at the moment, who knows what's going to happen from here, but it's had a good one leg down and another leg down too. So it's quite strong moves lower. So what you can also see, just remember we've got the stochastics up here. The move up was quite strong. It's getting extended at this stage. It's overbought. Market's ahead. It's getting ahead of itself. It's a bit. You can see the MA as a spread. We built that lower high, so we didn't know what was going to happen. But as soon as we capitulated straight through the anchor level, then you would expect that moves over, and we're going to see some sort of longer term contraction. Looking at one CKF, which could be in the process of rolling over now. We don't know what's going to happen, but just as an example of some signs to look out for, we have, just get this up, price, which is actually kicked up. Okay, and during that time, we got extended at this stage. Price kept going higher. The next move up, when it got extended again, was a bit weaker. And then now what we could be looking for, you can just see so that move up, the secondary move up was a bit weaker. And this move just recently is weaker. But the thing to notice is that it's made a lower high, and it just couldn't reach up. So what we started to see, price is still quite strong, had a move up, secondary move up, sort of at the tail end of this move, was weak, and then it had a decent pullback this time. We had to push back up. That move again wasn't as strong as the previous moves up, and it couldn't take out new highs. We built potentially a lower high here. So what we could be looking for, this is the current anchor for this leg. You would expect that would probably be broken. If that's the case, what we would expect is this move up. We're in the final throws, and we probably would expect a bit of contraction from there. Okay. Okay, looking at MYX now, you can see that market was pushing higher. We've got the MAs heading higher. Everything's in place for a move higher. Price gapped up. Not sure what happened there. Either way, it's popped up quite strong. It's had a bit of a pullback. We found the level through here at 177. The market's pushed up, taking out those highs just up here. Made a high at that was around 211, and pulled back, and it retested what we'd say is the anchor for this move down. So price here at the 177 mark, I think that's the key level. So up until this point, it come all the way back down, retested, and then we've got our lower high. So we've got our shoulder, whatever you want to call it, lower high, and the market started to press lower. At this point, we broke down. You can see market just really just did capitulate there. So that was a bit like our first example we were discussing, first scenario, where there wasn't just controlled contraction lower and held up above the anchor. It's just taken straight down, took out the anchor, and headed all the way down to 135, where we did get a bit of a bounce from there. But the thing is now, what we're seeing is markets just held resistance at 173 and popped up. So we had this little bounce here, push all the way down, pop up, retest it, made a higher low just in here at that 153 mark, retested that 173 zone, and then roll over from there. And again, we just took out this anchor, roll over, made a lower high. You can see the trend's lower, and it's just capitulated from there. So if we look at stochastics, this move up was quite strong. You can see at this stage from oversold, so extended low, held the anchor up, which is a good sign. And then you would expect if you're looking to buy, you could have bought just in here. Market's still looking okay. As soon as you got to this point, market got extended, you'd be questioning yourself whether it was actually going to take out those highs there at 211. And sure enough, we didn't. And here's another little example of a shoulder. You can see just in here, market's pushed up, pulled back. You would have expected it to continue on up here. Instead, we made a little shoulder and then capitulated from there. Okay, well, that's it. Let's any questions, just ask now. Okay, guys, we're back now. Just want to see if you got any questions on that. I hope it all made sense, and it's something to look at, I guess, if you're into your technicals. If you're not, there's just a few key points there which you can start to understand, to get used to, just to give you a bit of a heads up of what a bit of a helping hand from technicals to see if you feel or not you should get out of something. Anyway, any questions? Just whack them in the chat there. I'll get rid of that, and I'll get rid of that. And we'll bring up the market. Let's have a quick look at the market, where we're at. Okay, Paul, what's that? Sorry, I shouldn't have closed it down, hey? Scholastics. Screen CKF. All right, let's take a look at that. I'll actually go back over to here. Just bear with me a second. I'm just getting off Ninja. Yeah. All right, Paul. So I think I understand what you're saying. With CKF, what the idea is, what we're trying to, I guess we're trying to find out, or we're trying to understand is we know obviously it's pretty clear what the market's doing. It's heading up. It's quite positive. We've had that. You can see that contraction in there. We've got higher lows holding, and then we've got that leg up. So we're just trying to really look at that current leg up and how far is it going to go. So, for instance, we were long this. I can never quite remember. Might have been somewhere just in here with that. So looking at, if you've been following us for a while and you just look at this one's CKF. Is it coming up okay on the? I think it is. Yep. So let me just make that a bit so you can actually see the numbers there. All right. Yeah, that's a bit better. So if you've been following us, that's the type of setup we like. We like to see it break out. It's had a good pullback, but it's pulled back to support, still holding higher lows. But what we're looking for is that extension or acceleration higher. Now, we don't know where it's going to go, obviously, so we're trying to see signs. We're trying to follow it and just get an early warning sign of where we think it could potentially roll over. Here's some of these. And this is what we've been looking at. So the key level now, we've definitely made a higher low. Sorry, a lower high. So that's a sign of weakness. And you can also see if we just get, that's the leg up there. If we just get, it may or may not work. We're coming to the point now where it could just contract here, but that lower high is something we're looking at. And if you look at the stochastics there, it's just, okay, at this point, the move up to about here, it only spent a few days consolidating. It was quite strong. Then we had another on the stochastics, that move up to those highs. Okay, we made new highs, and that was a weaker move up, if that makes sense. So you're just looking for what's happening. Is it running out of buyers? Is price running out of buyers? Here, if that was a strong market, it should have kept going, but we've got a lower high. So it just means that whoever's buying it in here, the latecomers to the party, bought it up and they just couldn't push it up. So there's no one else to join them. There's only a few left. There might be, I know, say for instance, 100 buyers here. There might be 20 up here. So you're just running out of buyers. There's people coming off the sidelines into the market. So whoever's watching it, it's not an infinite number of people. You just think of it more as there is a certain amount of people watching this market and they want to buy it and they're trying to find an opportunity down here. Great little opportunity coming out of contraction. And so people might start piling in one after another. And that's what's pushing the market up. But when you get to a certain point when there's no one left to buy it, what's going to happen? It can't go up, obviously. All right. So what we're looking for, and you got those last few buys, last ditched effort to make new highs, which just didn't happen. So that lower high to us is a really good early warning sign. We're not saying jump out because probably from here your key level would have been down at 622, and still is, I'd say. I don't know what it's actually doing today. So a lower high, if that's followed by another lower high, or we get a break of 622, then that's a key level break. You can see that uptrend is actually broken, and then we may just get a longer term contraction. And from there, it's just trying to figure out look for signs of where it's going to, what's going to happen. It doesn't mean it's going to capitulate, but it could just contract in. If we can just draw it up. What we're seeing, it could just, if it pulls back through that level, doesn't mean it's going to capitulate. Like I said, it could just be that longer term contraction, making minor lower lows, and then you start looking for some form of high lows holding and pressing back up, right, take out that recent high, and then so on. All right, so that's what could happen over the longer term, or we just completely go boom, all the way straight back down. If we get this type of price action, that's like that's first scenario. So up 1.0, oh, there you go. It's probably up somewhere around here. What price was it? 620. Is it 620? Is it? All right, let's just get that chart up there. Oh, so that's actually broken down yesterday. I don't know why I'm missing a day of data actually. Oh, I'm not connected. Sorry, so to me that's not looking the best just from here. Actually, Ninja, you know what I've done there, Paul? And I know that now. File, let's just disconnect. I haven't connected the data for Yahoo, so I'm missing a day. Let's go back to the Ninja chart. I think it's just going to reload it now. There you go. So to me, that either way, that's definitely a lower high now, and it's broken out of that trend. So we may be getting a bit of what we're talking about, just grinding its way lower. high lows. You're looking at the daily chart there, Paul, by the way. 602, yeah. So it is getting beaten up a bit today, and you would have expected that. You really would have expected a bit of a projection up. The market's going to be profit taking soon. If there's no one left to buy, the market doesn't do anything like it did here. I think it's the first sign that okay, we need a bit of a correction. We need a bit of a pullback to bring in some more buyers to look to just to show some good signs again. I guess to look valuable again or to look attractive. Does that make sense there? Not a lot of stochastics. All right, Sharon, what? A lot of stochastics. I've tried different things in the past with regards to indicators, and you tend to, what I've found in the past, I've tried all different things, and you tend to get yourself a bit too confused. Third example. Now you've got me. I can't remember what it was. Let me just get that up. That was quite strong. You can see that was at this stage, MYX from over. So what question you got on that MYX? Yeah, while I'm waiting, anyway, we're just talking about indicators. That's right. Now you're going to when you're going through the motions of learning and trying to pick out what suits you. I used to use stochastics a bit and MACDs and all sorts of things, but now I've just found I just started looking at stochastics slightly differently. Not go, oh, okay, it's overbought, it's going to stop going up. It doesn't mean anything really. It just I'm trying to gauge with respect to price action. What's the strength of a move more than anything? I mean, we've all seen it before. This market can be overbought and just keep sitting at overbought for days and days and days as price just kicks on when it's quite strong. So you don't want to get caught out just selling into a market purely because of a stochastic. You have to look at, and that's where I like to look at lower highs. If you're looking to get out and it's getting overbought, it's getting stretched. Okay. Sorry, Paul, just reading your comment there. If it is getting stretched, I like to, and I do see a lower high. It's a good sign to me that it's running out of buyers more than anything else. Let me just get out MWorks now. So yeah, just looking at like I was saying with indicators, I like stochastics now, and I tend to use them across the board. But my main focus is I'm always got my 20 and 50 EMA, exponential MAs. I always look at those for we're getting contraction, and you want to see these start lifting up, and then you get those initial signs when they're starting to drift apart. For an uptrend, obviously your 20 is above your 50, and for a downtrend, the reverse. And then I'm just looking for shoulders. That's sort of the key behind what I'm looking for with price action. You just want to see signs of just buyers running out of steam, or selling running out of steam. If it's on a pullback and you're looking for an entry and things like that. So the main thing, obviously, to stick to is your price action and the how do you say, the psychology behind the price action and what's happening between buyers and sellers. What sort of reaction are you seeing there? I mean, if you've done your fundamental analysis, you stick out, you like that stock, it looks great. From there, you've got to pick out an entry. You don't just, well, in my opinion, just don't jump in because there's nothing to say it can't keep getting sold. You don't know who's on the other side of a market. You're never going to know that. So it's good just to get an idea what's happening fundamentally. It looks all good. I should be buying this stock, but where do I buy it? How do I buy it? What's happening between buyers and sellers? Am I the only one thinking I should buy it, or is a lot of other people thinking that? So I think the charts do tell you that. So Paul, just with respect to MYX, this is the last one we're looking at. I don't necessarily think it's tanking. This was a good example of something that has more than anything else. It's still, let's actually just quickly look at the weekly on this here. That was just one that if you were holding it, that was a really nice example of if you were holding it up here, especially when you had that gap up and price really didn't poke through that high. If it was a strong market, if everything was looking great, whatever the reason why it gapped up, you would have expected that to keep going. But the fact that it come all the way back down to test, that 180 zone, and then it's not a good sign for buyers. I wouldn't expect. And I think if you missed it here and it gapped up here, personally, I wouldn't sit there and buy it, even if I thought it was good. I'd rather just, put my money elsewhere to better work or wait for a better opportunity. So if that's the case, and then most of the buyers from the sideline are into the market at that stage, then who's left to buy it? Again, you've got to just remember that. And that's that type of pricing. You're testing in 180, pops back up. That should have kept going, really. It should have, held those high and lows, this one here, and kicked back up. Actually, I like this one. So we really should have support there, held a higher low. We've got a little one here for my mind, and then another little higher low there, and then so on a lower time frame, well, on a lower scale, that should have held that trend and pushed up through those highs, but it didn't. It just made instead a more major lower high. And as soon as that sort of broke down, you got a little minor lower high there. I just tend to do that, and then I just see that, okay, that's a major lower high compared to that. You're just starting to see buyers struggling. So we're not saying particularly that this market's going to crash. This is just a great example of it actually getting a good big sell-off, and really that hasn't finished yet. So if you're looking at that from a buying perspective, to be honest, I think it's got a lot more work to do. You can see the MAs are still spread apart. They're still selling in there. It's selling still strong. There's not that much buying really. You have seen a couple of rejection tails. You can see that it's pushed down quite hard, being rejected here, down at around 135, bounced back up, still struggled, and that was still struggled in here, in that zone as it touched up there a few times. So I'm just going to make that a bit darker. Touched up there a few times, and then we could potentially be seeing the same type of thing here, but that coming, one push down, tried to go back up again, found some resistance and had another push down, took out the lows, and you can see that was good capitulation too. It really got rejected there as well. So we started seeing after those sorts of tails, that price action, just a massive day, it could start bouncing back up. So the key level really is that 140. If we start making a higher low in here and we start building this type of price action here, then I would expect it to at least attack that 140 zone again, and then maybe start to build for a move higher. But it all just depends. I mean, I don't know what they do. It's just that longer term, like we just said there, you've got to take into context of that longer term trend. Yeah, it's not really, to be honest, it's had that good thrust back straight up to 210, and it's been sold off pretty heavily. But really, on a monthly basis, the key level's all the way down at 55. That's produced that leg up. Maybe contracting this one leg up on a monthly basis. Contracting, we may find some support in here, but really it's not showing any signs of finding support just yet. Through September there were higher lows, so how long do you wait until you can trust the higher lows? Through September. In here, is that what you're talking about? Back in last year? Not really. It's, I guess, I think I understand what you're saying. When looking back at that stage, let's just review drawing topics. Remove. Oh, okay. So, yeah, right. So what we've got, you just got to remember in context to everything. All right. So we know that market's pushed up, it's pulled back, it's had a push up, pulled back, and it's just gone bang. Yeah, for whatever reason, just so it's made those highs there. It's come back, retested that little low there after gapping up. So when we're looking at, say, for example, if I was looking at it in here, and I might have marked my chart up like this, just saying, okay, I'm quite positive on this. And this is the risk. You've just got to remember it's a risk-reward business. We're risk managers. We're not anything else. We're not, I don't sit there and think, I think it's going to go up. I'm just going to hold this until it bangs. I'm a risk-reward. So if I think this is my premise, I know it's had quite a few legs up. It's been quite strong. And just remember that monthly picture, that weekly picture as well. Had that strong move up, and we're just getting, so we're at this stage up here. If anyone that looked at that, you think, it's maybe starting to get overcooked. We don't know, but just at that stage in here, we're just coming off an overbought scenario. We don't know what's going to happen. We just know that previously it's gone from $1.40 straight up to $2.10. So that's a good move, and that's after grinding its way higher too, after working its way higher. So you just got to remember that in the back of your head. I'm taking a risk that I'm buying into an overstretched market. Beginning of your video, yeah. So I'm buying into it, in my opinion, on a daily or weekly basis. I'm buying into a stretched market. I'm not buying into something that I expect to keep. I'm just taking a punt that it's gonna get a few extra buys coming in. But at the same token, when I mark it up, if I bought just went on a break, if I can just draw that. So at this stage, I'm looking at that high there. Let's just drill that out. It's probably a bit better. Just drill that right out. Does that? All right. So I've got this little high in here. It's pushed up, bounced off that 175, 76, pushed up here, pulled back, made a higher low here. So I'm going, okay, I'm quite positive. If it breaks up through there, I might want to buy it. So I bought it on a break up here. My risk is going to be down here. All right, just if we just draw that, just below that low there. All right, and basically my entry might have been, well, that's not good. My entry might have been just on, breakthrough here, maybe on that candle there. All right. So really, at this stage, if I'm looking at this stage, I'm going, okay, I mean, I'm long. I'm looking at to go up through that level there. Had a couple of red days, and that's not so good. These candles here, I thought, okay, it's still holding this little trend up. If I've just connected the dots between that low and that low, I've got my trend line. It's starting to push up here. Got a green day. Everything's looking good. The next day, not so good. So really, that should keep going. In my eyes, my presumption that the market's going to keep going. It's strong, but just I've got to have in the back of my mind that this market has been strong for a fair few weeks, a long time now. So I don't want to risk too much on this. I'm not going to risk it below here because I think that's stupid. Putting a stop below 175 when you've entered way up at 203, I just find I can easily put my risk below this higher low just in here at 189 because of what I'm doing. I don't want to give it too much room to moan because there's a good chance it's actually going to roll over. And you can see when it made that lower high then, I could have just raised my risk to 195, say, just below that low, because I figure, okay, in context of what's happened, this low is starting to struggle. It's made another minor lower high here. And if it takes out that low, I'm anticipating this thing's going to roll over a bit. So that's sort of the reasoning behind it. Yeah, it's pretty much that. So you just got to, you got your plan of attack. I think we've discussed this in previous streams. You've got to have your plan of attack and why you're buying it. You've got to understand in context of what's happened in the past, what we're looking for. If we go back, if I can go back, and just the difference, if I can find a good example. Here we go. I like this. So just looking at this type of entry, you can see, or even in here, this is something we've spoken about quite a bit. You may have had a little base through here. You got your highs up here, a lower high in here. This is starting to hold. You can see that clearly. So, but in respect of what it's done in the past, it hasn't had it's had a leg up. It had a good contraction lower, had a strong leg up. It's starting to contract lower. We're holding higher lows. It's just earlier on in that overall longer term move up, and we haven't seen a savage move higher like we did at that stage. It's been a bit more controlled. So really, an entry in here, I mean, this is all hindsight, of course. You had that little spike up, pull back. So I would be happy just to buy maybe on a breakthrough. Just trying to find a nice little, that sort of break there. This is it's contracting in. It's touched down on that support. It's just broken up. You can buy one in there. You can buy it through those highs there, and then that you can see that run on a bit. And just expecting this major low to hold. Now we're pushing off a double bottom there. Retest fail, like we said. The market should have gone low. It couldn't. It held up. Buyers stepped in. Buyers are stepping in at higher prices. Buyers pushed it up. Buyers are stepping back in again when it pulled back. So you can just see clearer evidence in the same type of thing, even in here. You've got there, you've got that type of effect. We've got a high low in here, and even just buying up through there. So there's been a few opportunities, but that in context of what's happened, that's a bit different to that savage move higher, and you're probably clearer on a weekly basis. Does that make sense? I think I babble on a bit sometimes. You ask the right question, I'll go on forever. On pharmaceutical companies, do you think should steer clear of them for the time being? Yes and no. I don't know how well we're linked in over here than over in the US. I don't know a hell of a lot about pharmaceutical companies, to be honest. Look, Okay. Good work, Paul. It's and half the time, Paul, with regards to all this, a lot of it comes into it's like we said, you just got to try to justify your risk in each trade. And obviously, I know you do your fundamentals, so you'd have a better fundamental picture of me than me probably of why you want to get into something and what could be driving this higher. If it's got great support fundamentally, then you're really just drilling down to look for entries, and you're looking for those failed continuation lower. Yeah, pharmaceuticals. Like I said, I don't know a hell of a lot about them. But yeah, if he's going to come down on them, you expect there's going to be. You might find if they've had a good run too, it's got to be in context to, I guess, what they've done in the past. They've had a good run. You probably find that people are going to ease out of it on because we remember the markets look forward. They don't wait for. They're always guessing. They're anticipating what's going to happen. So the fact that he's coming out and he's probably already started to unload into pharmaceuticals because he obviously was speaking about that. That was part of his campaign, and now he's become president. He's mentioned it again in his speech. That's one area he's going to target, so they don't take so many profits. And that way, if people are long and they've been long for a while, you would expect to start thinking. I mean, you've got to if you're sitting on profit, the last thing you want to do is give up your profit. And really, even if I would expect, even if a lot of times the market could be moved by nothing fundamentally, just what people are saying. So remember that, like I said, the market looks forward. They don't just wait for confirmation, wait till he actually does something. They'll be anticipating that. And put it this way, if there's no one, again, it comes down to if it's had a good run, there's no one really left to buy. You just got the same old people buying it up. If it's had a strong run in some of those companies over in the US, then you need fresh buying into the market. Otherwise, if people are just going to step aside because of what he said, they go, look, I'll find a safer bet somewhere else in another sector or another stock, then you're just running out of buyers. And then anyone who's sitting on a profit would be thinking twice, especially about what he said. So I think it could be, I guess it could be a different story about over here on the ASX. But look, what it comes down to and what I've always sort of tried to stick with now, especially as I've got more confident with my trading, is just trade what I see. I'm not trying to guess. If I see like for instance, if I was in the US, if I was a trader in the US and I was trading US stock, pharmaceutical company, and it looked good technically, I'd probably still have a crack at it because I know what my risk. I can analyze where my risk is going to be, and I could see the potential. Like I said, if it's in a scenario when it's gone up quite hard like this, I probably wouldn't do it purely because of what he said. Does that make sense? Sorry, just having the last sip of coffee. All right. I hope that makes sense anyway. Let's take a quick look at LNG. I'm in the alphabet. All right. Let's just see what it's doing today. Ah, who picked this one? Sharon. Nice one. Simpson. No, look, have we discussed this before? I can't quite remember. This is a weekly. Okay, we know it's had a big push up, so it's got the potential to really kick on. 440, 460 in $5. So, and it has got belted back down from there. It was 2015 belted. Spent most of the year banging around these lows. And today, yeah, like you said, it's picked up 12% today. Let's go to a ninja chart. Just remember this is a day behind. So if you just saw this type of data, you go, oh, I don't know. It's actually still looking good, to be honest. But just remember where it's come from and the potential. Your first port of call, realistically, if you're going long, and it's down on its knees, remember, is right up at $1.29. What are we near 74 cents? So, in anyone's book, that's quite good. That's quite a good. And you can see if you're just taking it from here, that move down, you had really just absolute belting capitulation, selling hard, and you can see these moves. If we just go back, and this is another thing when you're looking at technicals, the moves down, the moves up, and so on. It had a push down, made that lower high, and you can see these moves down are starting. The red candles are starting to get wider, longer. So that means the volatility, the push down is quite more savage. And there's little bounces at the start. It weren't very high. You get a little bounce there, and it's a push down here, a little bounce here, and another big sell off. But then that bounce started getting a bit bigger. So it's getting to price. Just looking at that, and had another sell off, and that bounce. The selling is not coming in as strong here, and it started just finding support around that 46. So it's starting to lift and had another big pop up. That was sold straight back down again. So that's the initial, that initial move up off that support. It's pretty good if you can get in there, but it would have been hard to trade because technically there's not much. Could have been sitting on a good little profit there and ended up with a break-even trade. But either way, looking in context to what's going on, you can see buyers are starting to step in. The sellers are starting to run out of steam. Whoever was long is probably out. If not, you're probably holding it. So you're probably happy to hold. So in that context, then it's spent so much more time around those lows, and you can just see here it's starting to hold higher lows. That's a high low here, high low in here. It's taking out these highs. It's starting to get some key levels. So it's getting that type of curving action that we like to see. Yeah, and you can just see it starting to hold these minor high lows, breaking out to the highs. Even if you're just going long here, it's quite easy. And this is the beauty of seeing this type of price action. If you get stopped out, it doesn't matter. I mean, that's part of trading. But you don't, like I said, you can easily justify your risk there. So in my opinion, if I bought it even right now at 74, I'd probably have my stop. I could put it just below here. I could put it at 66, say, just for instance. Because I know if I get hit there, it's broken this sort of uptrending, and it's maybe doing a major retest. Maybe it may just spike down and get me out, and so be it, that happens. Or I would expect my premise if I got out there, if I got hit there, it's going to roll over and maybe retest this low at 52, where I could start analysing again. Okay, no big deal. I might have one or two goes at this trade before it kicks off. But if I got in here and I've got minor risk, look at the risk reward on that one. The risk, your next level, you've probably got a level just up here at 83, only a minor one, but the major one's sort of up towards that 130 mark. So your risk reward could be quite large. So really looking at that, yeah, doesn't look too bad. Actually, I think we have spoken about this, but got it at 70. Yeah, no, look, where would your risk be there, Sharon? Where would you put your risk? Don't take my comments for everyone's always right and wrong, but I just like to see that type of price action, high low stepping in, taking out those lower highs. You're starting to see, and after that big spike up, big sell off, and that sell off, it was really weak. Honestly, it should have taken out those lows and continued down. But the fact is, we're down. The price is down on its knees after being up at 450. Down here, you're starting to get buyers dribbling into the market going, this is a good buy again. Nothing's happening fundamentally to the company. It's still looking okay, whatever it may be. But like I said, that risk reward on that trade there is looking quite good, even if you just held it down at 60. But R and R, I mean, we've got about 60 to 74, 74 up $1.30. It's probably 2 to 1 at that price. Yeah, so looking good. Yeah, look, actually, just see, it's probably better. Just drill that down a bit. This is the hardest thing because you've got 2 good days there. Technically, you put it below here, 67. Now, that doesn't mean, that means you're going to get stopped out at a break even, only a small loss. So really, you've got to look left and just see where it could be heading to. Where am I going to run out of steam? And just mark it up on a chart. For instance, you're probably going to be, what do we got? That high there, high at 83.5. Actually, just got there, hasn't it? Yeah, I think it's just got through there. 83.5. No, the high today is 80. So it's just touching up there. Now you just want to see, it could be a good idea just to take half off, and then just let the next half run, just see how it goes. Like I said, it's up to you where you're looking. If you're happy to take some off, if you've got a big position, small position, however you're attacking it. If it starts just to struggle up here, yeah, it could just blow straight through, and that could be a no level or whatsoever. So anyway, I'll probably babble on quite a bit now. I hope you enjoyed that, guys. If there's any more questions, feel free to whack in the chat, but we're going to have to just call it a day there. Being a Friday, I think you'll all be looking just to start and unwind for the week, going into the weekend. We'll be back obviously on Monday. And like we mentioned at the start, if you've got anything you want to chat about, yeah, yeah, it would be. It's always good when they run, if they could be a bit more. if you've got any questions, put them through. If there's anything at all you just want to discuss, just whack in the chat because the idea behind it now. Yeah, it will be, Paul. No worries. Even feel free to whack in a question, Paul. Email us the questions if you have them. I'll try and get back to you when I get a chance. Um, yeah, I tend to forget that sometimes. I do really enjoy my technicals, and I do find the better I've got them over time, the more I understand, the more I like doing them. And it's just so much information I can babble on forever. So sorry about that if it's an overload, but it's always something to think about. Yeah, so feel free if you've got something you want to chat about, any questions, just put them through to support at tradesetup.com.au, and then we'll get back to you as soon as we can. Anyway, thanks for joining us, guys. Enjoy your weekend, and we'll speak to you soon.